Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. First, a disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. We're going to talk about consumer price index, and then we'll discuss the gross domestic product. Okay, consumer price index, also known as CPI. Now, what is CPI? The CPI, or consumer price index, year annual change in the price of a standard basket of goods and services consumed by Australian households. It is the most widely watched measure of inflation and plays a central role in shaping Reserve Bank of Australia, the RBA, policy decisions. Typically, a higher than expected CPI strengthens the Australian dollar by reinforcing expectations of rate hikes or extended policy tightening. On the other hand, a lower than expected reading often weakens the Australian dollar due to potential rate cut, pricing, or dovish central bank outlook. Now, on June 25th, 2025, the CPI result we got is 2.1%. That's the actual number we got. The forecast was 2.3%. The previous number was 2.4%. So the CPI came in lower than forecast, showing a deeper than expected slowdown in annual inflation at 2.1%. The reading moves closer to the lower end of Reserve Banks of Australia target range and marks a continued deceleration from prior months. Now, the market reaction and the AUD USD impact that we got. Let me show you the chart of AUD USD currency pair. Right now, AUD USD is moving up. Well, I told you it's going to rise up more last week when we discussed this. The CPI news data comes out, and despite the weaker inflation data, the AUD USD moved higher after the release. This counterintuitive reaction suggests that markets may have already priced in a soft CPI, and investors could be responding to other supporting factors such as weaker US dollar sentiment, stronger commodity prices, technical rebound, or short covering, or the expectations that the Reserve Bank of Australia may still remain cautious about easing too soon. The post release move indicates bullish pressure on the Australian dollar, even in the face of soft inflation data, emphasizing that broader market sentiment and external factors are country playing a strong role in price action. The key takeaways for the AUD USD currency pair price action is that we got the CPI, which is below than the forecasted level. The forecast was 2.3%. The actual number we got is 2.1%. Now that's a dovish signal, normally bearish for the Australian dollar. But overall, what we got is the reaction that we got is AUD USD moved higher, suggesting broader US dollar weakness or AUD specific support. Now, the market focus is that beyond CPI, traders are watching US economic data, commodity trends, and Reserve Bank of Australia tone in upcoming speeches. So the conclusion is the June 25th CPI report confirmed a continued easing of inflation in Australia, which in isolation might have been bearish for the Australia. However, the rise in AUD USD after the release shows that traders are factoring in broader market forces and perhaps adjusting expectations about the pace and timing of any potential Reserve Bank of Australia policy shifts. Looking ahead, traders should monitor Reserve Bank of Australia commentary, global risk sentiment, and US economic calendar to better understand where the AUD USD might head next. The next one is the gross domestic product, GDP, related to USA. This is the quarterly report that we got. Now, what is gross domestic product? The gross domestic product, also known as GDP, quarter over quarter, Q over Q means quarter over quarter. It measures the inflation adjusted change in the total value of goods and services produced within the USA economy compared to the previous quarter. It is the broadest and most comprehensive indicator of US economic health and a key driver of monetary policy decisions by the Federal Reserve. Generally, a higher than expected GDP strengthens the US dollar by reinforcing economic resilience and potential tightening of policy. A lower than expected print, however, suggests slowing growth or recession risk over weakening the US dollar and lifting Euro USD. Now, on June 26th, the GDP report result is as follows. The previous number was minus 0.2%, the forecast was minus 0.2%, and the actual number that we got is minus 0.5%. Now, the actual GDP print surprised to the downside. The forecast was minus 0.2 and we got even minus 0.2, 0.5. So minus 0.5 is even a more, negative number. And if you take a chart or take a look at a chart of euro dollar currency pair, you see the euro dollar just keep going up, up, and up over here. So I was expecting a bullish leg in price action of euro dollar and just keep going up, up, and up over here. Now, the actual GDP print surprised to the downside, showing a larger than expected contraction of minus 0.5% in quarter two. This marks the second consecutive quarter of negative growth, heightening fears of a technical recession in the United States of America and raising concerns about the broader health of the economy. The market reaction and the Euro USD impact that we got is as follows. The uh, that is the reason why we got a bullish price action inside euro dollar currency pair. The reaction signals that traders are now increasingly pricing in a dovish shift in the Federal Reserve's tone, earlier than expected interest rate cuts, and a slowdown in US consumer demand and business investment. The weak GDP reading has dented confidence in USA economic momentum and pushed investors toward safer or alternative assets, including the euro. So the key takeaways for the Euro USD is the GDP, the actual GDP, I mean, we got is minus 0.5%. If you compare it with the forecast, which is minus 0.2%. So the interpretation is deeper than expected economic contraction in the US economy. And due to this reason, the market response that we got is that Euro USD moved upward as the USD weakened. Now, the implication is obviously a risk of recession increases in the USA, and the Federal Reserve may ease sooner. Conclusion is the June 26 USA GDP report delivered a clear bearish surprise for the US dollar, with a deeper than expected minus 0.5% contraction, confirming growing concerns about the strength of the USA economy. As a result, Euro USD pushed higher as traders now expect a more cautious stance from the Federal Reserve going forward. Now, looking ahead, all eyes will be on upcoming labor market, inflation, and Fed communication to assess whether the central bank will acknowledge economic weakness and adjust its monetary policy outlook in response. For Euro USD, the near term bias remains tilted to the upside unless incoming data offers a more positive signal for the USA economy. Next, let me discuss about euro, dollar, and US dollar, Swiss franc. Let us go over to a price chart. Now, regarding the euro dollar, you can easily notice that price action just keep printing higher swing highs and higher swing lows. It's a nice uptrend going on in euro USD currency pair. If you take a look at weekly time frame, there's a nice uptrend going on, and I expect further bullish price action in euro USD currency pair. Now, if you look at the US dollar Swiss franc currency pair, I told you last time that I'm expecting a drop in price action of US dollar Swiss franc, and this is exactly what we got. If you check out the monthly time frame, price action just keep going lower and lower. We do have some support down over here. One support is present at 0.7059 area. I don't think market is going to hit that level, but it is also possible that we might even get a break below this level as well. But for the time being, the monthly chart looks bearish. The weekly time frame also looks bearish. The daily is also bearish. Now, at first I thought it might going to find some buyers over here, but it didn't. So the way I see market is probably going to drop even more. Now, along the way, we might get some kind of a pullback in market, and then further, resumption to the downside. That also looks quite possible. So maybe next week or at the end of this week, market in the USD Swiss franc price action, it might tries to rise back up over here, but overall the trend is down. So we might get just a pullback, just maybe 200 pips pullback, and then market is going to resume the downtrend inside US dollar Swiss franc currency pair. Next, let us take a look at current week macroeconomic events and data releases. Okay, the first one is the July 3rd Consumer Price Index for the Switzerland CHF USD CS Swiss franc. That's the currency pair. The next one is the July 4th German factory orders month over month, and this is related to the Eurozone. And the currency pair we're going to discuss is the Euro USD. Okay, so let's talk about it further. Consumer Price Index CPI, Consumer Price Index month over month in Switzerland. We're expecting this report to come out on Thursday, July 3rd, 2025. And this is basically the Swiss inflation report preview. The time is 6:30 a.m. GMT. Now, what is the Consumer Price Index? The Consumer Price Index month over month measures the change in the price of goods and services purchased by households in Switzerland compared to the previous month. It is the key gauge of inflation and a crucial factor influencing the Swiss National Bank in its monetary policy decisions. Generally, a higher than expected CPI increases the likelihood of tighter monetary policy supporting the Swiss franc. A lower than expected print may encourage a more dovish stance, potentially weakening CHF and pushing the USD CHF currency pair higher. Now, the CPI month over month report expectation is the previous number was 0.1%. Forecast is also 0.1%. The actual data did not release yet, but it will get released on July 3rd. The market expects modest inflation growth with both the forecast and previous reading at 0.1%, suggesting price pressures remain contained. A deviation from this level could provide fresh volatility in USD Swiss franc, especially if paired with shifts in global sentiment or Swiss National Bank policy signals. Now, I would like to discuss some possible scenarios and impact on US dollar Swiss franc. Now, if the CPI we get is higher than the forecast, like we get zero point 0.2, the forecast is zero point 0.1, and if we get zero point 0.2, then this means that it signals the rising inflationary pressure, and it may increase speculation that the Swiss National Bank, the SNB, will avoid further easing or even consider tightening. And that, if we get a higher number, that's going to most likely strengthen the CHF, leading to downward pressure on USD Swiss franc currency pair. And if the CPI matches the forecast, like we get the same 0.1% number, which means that we should expect a stable inflation in line with expectations. And market reaction may be limited unless accompanied by strong movement in other economic data or central bank guidance. And if that's going to happen, expect a sideways price action, some kind of range bound reaction um, inside US dollar Swiss franc currency pair. And if CPI number becomes lower than the forecast, like it goes below than 0.1%, then this indicates weakening price pressures and potential disinflation. And this could raise expectations for a more accommodative Swiss National Bank stance. So if we do get a lower number, lower than 0.1% number, then that is likely to weaken the Swiss franc, pushing the USD Swiss franc higher. Now, right now, when we're discussing the USD Swiss franc, right now the USD Swiss franc is only going down. So if we get a weaker number, USD Swiss franc is obviously going to rise up. Okay. Now, the broader market context is the Swiss National Bank has already, taken a more flexible approach to policy, emphasizing inflation control while remaining cautious amid global uncertainty. With inflation slowing globally and the Swiss economy growing at a moderate pace, traders are watching the CPI release for signs of where the SNB stand, especially compared to other central banks like the Federal Reserve of USA. So the key takeaway is if CPI number becomes greater than 0.1% and we get this number, then USD Swiss franc is going to drop even further. The trend is already down inside the USD Swiss franc currency pair, which I just showed you. And if the number, the CPI number is below 0.1%, then I expect USD Swiss franc to rise up. And if we get 0.1%, same as the forecasted level, then expect sideways price action inside US dollar Swiss franc currency pair. So the conclusion is the July 3rd Swiss CPI month-over-month report will offer important insights into domestic inflation trends and could impact the USD Swiss franc pair depending on whether the data deviates from expectations or not. While the forecast is flat at 0.1%, a surprise reading may shift market expectations around future Swiss National Bank policy actions, especially amid a complex global inflation and interest rate environment. Traders should also monitor USA economic data and risk trends to gauge the broader trajectory for US dollar Swiss franc currency pair. The next news item to discuss is the German factory orders month over month. So this is related to Eurozone manufacturing activity. Okay, now what is German factory orders month over month? The German factory orders month over month indicator measures the change in the total value of new purchase orders placed with German manufacturers. As the largest economy in the Eurozone, Germany's industrial data is closely watched by traders for early signs of economic strength or weakness across the region. Stronger than expected factory orders typically suggest rising industrial demand, business confidence, and future production growth, all of which can support the euro. Now, the euro USD is already going up. Let me show you the chart of euro dollar over here. You can see we got this nice uptrend going on inside euro dollar currency pair. Okay. Now, a weaker reading may indicate slowing economic activity, pressuring the euro and reinforcing a dovish outlook from European Central Bank, the ECB. Now, the factory order report expectation is the previous number we got is 0.6%. The forecast is actually negative 0.2%. The actual data did not release yet, but it will get released on July 4th. Okay, so markets are forecasting a minus 0.2% number, which, if confirmed, would mark a reversal from the 0.6% growth seen in the previous month. This expected drop reflects growing concerns about global demand, tighter credit conditions, and lingering geopolitical or trade related uncertainties. Now, I would like to discuss some possible scenarios and impact on euro dollar currency pair. If the factory orders are better than forecast, like we get get a positive number instead of getting a minus 0.2%, which is the forecasted level. So if we get a better number, this signals resilience in the German industrial sector and may boost optimism around Eurozone recovery and delay ECB easing expectations. And this likely support the euro, pushing the euro USD higher. Well, the trend is already up in euro dollar currency pair, which I showed you. In fact, if you check out the weekly chart or even if you go to a monthly time frame, euro dollar just keep going up over here. And with the exception of monthly, rest of all of these lower time frames, even the weekly, the daily, the 4 hour, all of these charts, they are looking overbought. So I don't think we will get a good number. um, but let's assume if we do get a positive number, then expect a bullish leg, more bullish price action in euro dollar currency pair. Now, if factory order matches the forecast, like we get a minus 0.2% number, and then this confirms moderate industrial contraction already priced into the market. Uh, However, we could also get some kind of a top and Euro USD could move sideways as well. So the forecast is minus 0.2%, but this is what the people are already expecting. So traders may interpret the reading as neutral, awaiting further confirmation from the other economic indicators. And if factory orders are weaker than forecast, like the forecast is minus 0.2%, and let's say we get even lower than that, that suggests a deeper slowdown in Germany's manufacturing base. And this may increase concerns about broader Eurozone economic performance. Likely, this is, this number, if we get a weaker than forecasted number, that's likely going to weaken the euro, driving the euro USD lower. Now, the broader context is the ECB remains cautious as inflation pressures ease, and any sign of further economic softening, especially from Germany, could tilt sentiment toward earlier rate cuts. At the same time, the Federal Reserve in USA posture and upcoming US data, including labor and inflation reports, will continue to drive the USD side of the equation. So the key takeaways for the Euro USD is, if we get factory orders above than minus 0.2%, or let's say we get a positive number, then expect bullish price action in Euro USD currency pair. Now, I doubt it because the forecast is minus 0.2%. Now, let's assume if we get the order lower than minus 0.2%, okay, then expect a top and a drop inside euro dollar currency pair. And if we get a minus 0.2%, as the way the analysts have forecasted, then expect a sideways price action in euro dollar currency pair. So the conclusion is the Germany factory orders month over month report on Friday, July 4th at 6 a.m. GMT is set to provide a timely update on Eurozone manufacturing momentum. With a decline already forecast, a surprise in either direction could sway Euro USD notably. Traders should watch this data closely, especially in combination with broader trends in global growth and central bank signals, to assess the next leg for the euro against the US dollar. Next, let us discuss about the euro dollar currency pair, and then we'll discuss the AUD USD currency pair as well. So regarding the euro dollar, um, the news that we are probably going to get, that's not going to be a good one on Friday, because the factory orders, the expectation is, or the forecast, I would say, is minus 0.2%. So we could get a top in euro dollar currency, but for the time being, it's an uptrend in euro USD, and I expect further upside in euro USD currency pair. Now, caution is required because the thing is, weekly time frame, you notice the RSI is above the 70 level. In daily, same story. Even in 4 hour time frame, RSI is above uh, than a 70 level. So this thing is suggesting that we are most likely going to see a top inside euro dollar currency pair in next coming trading days. Okay, this one looks quite possible. Next one is the AUD USD currency pair. Now AUD USD is moving up. It looks bullish, but if you check out the smaller time frame, like 4 hour, it's becoming kind of overbought. 1 hour, same story. We are even getting some divergence over here. So AUD USD currency pair is telling me that we might get some kind of a top in price action sooner than later. Okay. Next one is the US dollar Swiss franc. Okay, USD Swiss franc is it looks oversold, and we got the same story in daily as well as in 4 hour as well as in 1 hour. Even if you check out the 15 minutes time frame, it's loading the chart. It's oversold. Okay, so this is telling me that market becomes so much oversold, the chances are high the price action is going to move up a little bit, like the way I told you over here, that we could get some kind of a possible pullback, and then market is going to drop further. Okay, in US dollar Swiss franc currency pair. Next one is the spot gold. Okay, regarding the spot gold, over here I was expecting a drop or a pullback. We got it. Now I'm expecting spot gold to rise up further from these lows. So hopefully the spot gold is going to rise up further. The trend is clearly up if you check out the weekly time frame. This is a long-term chart. The trend is clearly up inside XAUUSD pair. So the spot gold trend looks clearly bullish. Okay. So what we have learned today, well, I discussed about the consumer price index for the Swiss franc, and also discussed about the important news related to Eurozone, the Germany factory orders. Then we discussed about the Euro USD, AUD USD, US dollar, Swiss franc, and spot gold. These are the assets to watch out for profits. What you should do next, well, stay tuned for the schedule of next week's trading webinar. You can subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about trading, just visit TradeGeek and access free trading courses for beginners, intermediate, and expert traders. Thank you for hanging around, and see you at the next trading webinar on Tuesday, July 8th, 2025 at 12 p.m. UTC time. Okay, so that's it for the time being from my side. Have a nice day and bye-bye.